screen. And then hopefully you will all tell me if that is pulling through. Can I get a thumbs up? Cool. Okay, I think let's just get straight into it. So I'm Fee, and today is keeping track of the money. So this is forecasting your numbers, understanding your cash flow, and importantly, your systems. So as I mentioned, I'm Fee. I'm an ACA qualified finance professional. I started my career at Deloitte as a chartered accountant, but my friends would describe me as a serial entrepreneur because I quit my job in finance to basically sell chicken on a market stall, is how my mum and dad described it. So I founded Lime Hut, which is a contemporary Caribbean street food brand in Soho. We used to have a kitchen takeover in Peckham. And it was really fun running that business. But whilst running that business, I kept meeting really phenomenal founders from underrepresented backgrounds who were incredibly passionate about the product they'd created or the service they sold or the industry in which they worked in. But there was a common theme. There was a lack of confidence or knowledge when it came to tackling the accounting, tax, finance, strategy side of running the business. And so that's when Coco Financial was created with my co-founder, Shanae. And it's essentially a safe space where there is no such thing as a silly question to help small business owners, entrepreneurs, side hustlers get to grips with accounting, tax, finance, and strategy. And like I said, there's no such thing as a silly question, which brings me on to how we're going to run this session. It is a workshop. Some bits are a little bit interactive. Other bits are less so. But what I encourage you to do is, rather than waiting for the end to ask questions, is to ask questions as we go along. The reason being, if you're thinking it, someone else in the room is probably thinking it too. So do feel free to come off of mute and ask those questions. If you're feeling a bit shy, you can type them in the box instead. But because I'm currently working remotely and I haven't got a second screen, I can't always see the questions that pop up. So either I'll address them at the end, or I might ask my colleague, Christy, who is on the call, if you see any juicy questions that look like they're relevant to what I'm talking about in that moment, if you're able to come off mute and just signpost me that there's questions, and we can stop sharing the screen and we can basically look at those questions and dive in. And if it's something that I think we're going to address later on, I'll let you know and we'll keep it moving forward. But that is enough about me. I would like to get to know all of you better. So if you have your phone to hand, please scan this QR code. And if the QR code isn't working, you can use the link that I've written on the side, which is polev.com/Coco Financial 968. I'm going to leave that up for a bit. What that will do is it will turn your phone into a remote control. And what you'll be able to do is answer some questions live. If it asks you for a credit, just press skip. I promise you, we're not trying to get any money out of you. You should just add your name and get ready to go. I'm going to leave that up for about 30 more seconds. And perhaps, Amaka, if you're able to just drop the polev.com/Coco Financial 968 into the chat, just in case there's any latecomers, and then they'll be able to join that way. So hopefully you're all set up. I'm going to stop sharing for a second whilst we switch over. And get the poll started. Great, that is up. And also, if I could just get a thumbs up to make sure you have actually managed to get onto the... Yeah, okay, I can see a couple thumbs, great. Let's get back to sharing. Great, so it says there's 1,000 points per answer. Just to be clear, there's no right or wrong answers. It is purely just the functionality of how it works. But essentially, if you answer quickly, you get more points. So you can give yourself some fake glory points if you like. First question, and this is just a warmer, so you get used to it. How was your Christmas and New Year? Was it busy, busy, busy? Was it nice and chill? Were you one of the unlucky ones like me that got struck down ill with that festive bug? Or are you just in disbelief that reality's hit hard today and you're still in Christmas mode? Okay. Oh, no one was ill like me. Oh, you all escaped. Lucky you. Okay, so two-thirds of you had a nice and chill one. A third of you were busy, busy, busy. And thankfully, you're all a lot healthier than I am, it would seem. Next question. How often do you budget or forecast? Every month? Every quarter? On a needs must kind of basis? Or perhaps it's more of a girl, let me add that to the to-do list. Like I said, save space. No right or wrong answers. Okay, so some of you every month, well done. That is a very good discipline to have. It's not the easiest when you're running a small business. Many of you are on a kind of needs must basis. I get it. When you're a small business and you're wearing a million different hats, it's not always something that gets prioritized, but we're going to talk about why it should be. And some of us is a, let me add that to the to-do list. Totally fair and understandable. What mode would you say your business is in? Are you in the just getting started? Are you perhaps you've already started and you're kind of ticking along? Or are you in growth mode now, which can often feel quite uncomfortable when you're growing, but it's kind of where you're the gap between where you are and where your ambitions are? So most of you are in growth mode. Great, because we have a whole section kind of on growth and the pain points of growing. Some of you are ticking along, which is fine. Hopefully some of the growth elements that we discuss will feel relevant to you and that will be the next stage of your business. What for you, no right or wrong answer, is the most important metric? For you, is it profit? Is it revenue? Or is it your cash balance? Essentially, how much cash is in your bank account at any given moment? Is it profit? Is it revenue? Or is it your cash balance? Okay, so, oh, sorry, was that a question?
I
Oh, I think,
understand.
oh, I think someone might be off mute by accident, but it's okay. Right, so most of you care the most about revenue. A third of you care about cash balance, and none of you care about, well, not that you don't care, but in terms of it being your number one most important metric, profit is not the one for you at the moment. And there's no right or wrong thing. I mean, they're all three very important metrics, but I think they all mean quite different things. And quite frankly, when you're a small business, getting going, cash is probably the thing you're looking at, because whether you've got revenue or profits, what you want to know is, do I have enough cash in the bank to fulfill the next contract that we get, or pay my staff, or even pay myself, you know? But revenue is where you understand kind of, are you growing? Are you attracting more customers? Are your price points something that can kind of grow and sustain you? So I can see why that is also a very important metric to those of you who are perhaps in growth mode as well. And the last question, I did say there's no right or wrong answers, but there might be on this one, is, are you ready to propel your finances forward? It's either a big, fat, capital letters yes, or I get it, it's the first Tuesday going back to work. You might be feeling a bit meh. I'll forgive you if you pick it, but hopefully we've got 100% on the yes train. Are we ready to propel our finances forward? Yay, I love a forced answer. Okay, great. Thank you everyone for taking part in that. It's really helpful. Of course, the workshop is already written, so it's not that we'll be adapting it in huge ways, but given that I've seen the responses and I can now understand who is in the room, I will make sure I focus certain attentions on different parts of the workshop. Like I said, if you have questions as we go along, please do answer them. I'm going to chat the chat box very quickly. Sorry to those who couldn't join because you were using your phone. Hopefully, oh, I can see your answers anyway. Good to know. Right, we're going to get started. Like I said, come off mute if you have any questions. If you're feeling a bit shy, you can put them in the chat. And like I said, hopefully my colleague Christy will help point out if we've got a bunch of questions that I have missed. But without further ado, we will get going again. So we are going to get into the first part of the business, which is getting familiar with financial statements. This bit can be a bit heavy, so I've decided to front load it while I still have your attention. It's heavy, but it's important. So we're going to get that bit out the way first. And it's important that you make notes because I think this is the bit that most business owners struggle with. We'll then get into budgeting and forecasting and a little bit of interactivity there. And then we'll have a break. And then we'll come back to the lighter part of the session that is equally as important, which is about propelling and systemizing your business. And then we will end, as I always like to do with every workshop, on a sort of money mindset piece. And given that most of you are in growth mode, this is about making sure you've got a financially abundant money moves mindset. As always, the information presented in the seminar is for your general information and use and is not intended to address your individual requirements in an advisory capacity, but do not let that make you shy away from asking questions. We want this to be as interactive as possible. So, getting familiar with financial statements. The financial statements that all businesses, whether you're a sole trader or a limited company, should technically produce. Limited companies have a legal duty to do so. Sole traders don't have a legal duty to kind of publicly produce them, but you still would have a profit loss, balance sheet and cash flow. These are really important snapshots of what's happening in your business, either over a period of time or a particular snapshot in time. And that's why getting to know these numbers and feel more comfortable with them is very, very important. So I'm going to walk through a couple examples just for kind of a demonstration walkthrough, just so you start to feel a bit more familiar with the concept of it. So this is an income statement, which is also known as a profit and loss. And what this shows you is what has happened over a particular period. So this would have been last year's accounts from the 1st of January. In fact, let me update this. It's 2025. Let's say that this is the accounts that have just ended. So 1st of January, 2024 to the 31st of December, 2024. So essentially the last 12 months of the year. What has happened during that period of time? I know numbers freak out a lot of people. Just remember, numbers are telling a story. So all that's going on here is a numerical representation of the story of what happened in your business in the last 12 months. So in this instance, at the top end of your profit and loss, you always have your revenue. So this is sort of your gross sales, less any kind of returns or discounts, so that you get to your net sales. Essentially, that final revenue figure of what you have sold in the period to customers. Directly below that, you have something called your direct costs, which are known as your cost of goods sold if you have a product-based business, or perhaps cost of services sold if you have a service-based business. So let's say, for example, that I'm just using something that I've got to hand here. I have got, this is some deodorant. So we've got a beauty product here and you're selling that. Every time you make a sale, the price, I guess, that you've priced it at, that your customers have bought it at, goes into your revenue. But the cost of actually selling this might have been getting the packaging, the cans that it goes in, the whatever the weird liquid is inside of it, getting that manufactured. That would be a direct cost of sale because you've only incurred that cost because you are selling this product. And so your cost of goods sold or cost of services sold are then what you take away from your revenue. And that's how you get to this figure here called gross profit. And that's a really important figure because that tells you at what margin you are basically selling your product at versus it's costing you to make, produce, or bring to life if you're a service-based business. And then underneath your gross profit, you have basically a category of expenses that are known as admin costs or overheads. You've probably heard the term overheads. And these are the kind of costs that you incur whether or not you have sold one of these items, okay? So that is things like advertising costs. Many people say, hey, Fee, wait a minute. Surely that would be a direct cost of sale because I have spent money on this advertising campaign to be able to sell. yes, that's true, but it's not directly linked to the physical sale of this, in the sense that it helped with advertising and awareness, but you can't guarantee that somebody saw your billboard on the bus and that is why they purchased it. Things like bank charges, any wages. I mean, staff are a cost that you're going to have to pay for whether you have sold something or not, right? So if you've got Mary in HR and Peter in accounts, they're getting paid whether you've sold one of these or a million of these, right? So these are your overhead costs. So you add all of those up, and then you get to your total there, and you deduct that from your gross profit, and that's how you get to your operating profit or your operating income. And that is essentially the relationship of your profit and loss. So it's your revenue, take away your direct costs, take away your overhead costs, and that's how you get to your profit or your loss during that particular period. Now, moving on to the balance sheet, and this is the one that most people don't particularly like. I'm going to take away the numbers on this one because I think this is more helpful to just kind of have an illustration because of, I guess, feedback from sort of the last sessions we had. It got a bit confusing trying to kind of explain the relationship between the profit and loss. But essentially, the balance sheet is a snapshot of time. So we're going to pick this date. This is on the 31st of December. So rather than showing us what happened over 12 months, this shows us your assets and your liabilities and your equity at a particular point in the year. So in this case, the 31st of December, a week ago. And what you do is you lay out your assets. So assets are basically things that you own. And there are things called current assets, which are basically things like cash or cash equivalents, which is a bit of a strange term. But if you sent an invoice out to someone on 30-day payment terms and they owe you that money, that would be kind of considered a cash equivalent because you're going to get the cash for it quite soon. Whereas fixed assets are not cash equivalents whatsoever. They are things you own that can derive value for you later. So property and equipment. Let's say, going back to this example, this pour can is going to get used in every example now that it's on my table. But if I buy some machinery that creates this and or prints the labels on it, that's an example of a piece of equipment that I own that is helping me produce things within my business, but it's not an expense that sits on my profit and loss because I own this, I could sell it later, and it's helping me kind of produce things. A great example of a fixed asset that many people think as an expense, but is actually an asset that sits on your balance sheet, is a laptop. I'm sure many of you are dialing in from your laptop today, and if you have purchased a laptop in your business, that sits on your balance sheet, not your profit and loss. And then you have things called liabilities. And rather than them being things that you own, they are things that you owe to other people. So examples of current liabilities would be things that you owe kind of within a short period of time. So that might be wages to your staff. It might be income tax payable. Example of more long-term liabilities are things like a bank loan. Perhaps you got a business bank loan when you started running your business, and you would pay it back over a 4-year period. Anything kind of over 1 year's worth of payback would be deemed as like a long-term liability, and that sits on your balance sheet too. And then you have this bit at the bottom called your owner's equity, which if you're a director of a limited company, this is essentially your equity, your stake in the business. Perhaps other external capital might be in there too. But the relationship with the profit and loss is any kind of retained earnings you have from your operating income, you would add that into your balance sheet each year. And so essentially you would hope, if you are a profit-making business with nice cash flows, that this would be going up and up every year, so that your equity is accumulating based on your accumulated retained earnings. So that's the profit and loss and the balance sheet. Then this is the bit where we tend to lose the room. So listen up. This is all about cash flows. And again, I think I'm going to get rid of the numbers just so that we can talk about this conceptually a little bit more. What this is basically your cash inflows and your cash outflows. And many people get confused as to why, if you've got your profit and loss that shows your revenue coming in, your costs going out, and your profit, why is it that when you get to your cash flow, your opening cash balance and all the activity that happens in and out doesn't equal the same as your profit? We're going to get onto this in an exercise right after this, but the short answer is it's all about timing is one element, and the other element is certain cash movements don't relate to the profit and loss. So what I mean by that is, using this profit and loss example here, we have identified that we made 20K in net sales during this period. Looking at the cash flow for the same period, you might have a figure like £18,000. And you're probably thinking like, well, what happened to the £2,000? Well, it's very, very possible that you build 20K worth of revenue, but have only received 18K. I mean, hands up virtually, how many of you have ever had a late payment from a customer, right? This is an example of you having recorded the revenue, and the profit and loss will pick that up. But if you've not received the cash yet, it's obviously not going to show up on your cash flow because your cash only shows actual cash impacts in and out. And so then when you're paying for all these other things like advertising, bank charges, wages, rent, all these things, I mean, typically you would expect to see those coming in and out in the same way. But a bit like if your customer paid you late, if you ever have been guilty of paying somebody late, so let's say you had to pay your office rent and you paid it a week later, then there might be a discrepancy on that line as well from a cash perspective, because even though you've received the bill for it, you haven't paid it out yet. And then the other element is just like I said, certain things that aren't on the profit and loss that are perhaps set elsewhere on the balance sheet. So let's say you purchased the laptop that I referred to earlier. That's not going to sit on your profit and loss because it's not a profit and loss item, but there's obviously going to be a cash impact because you didn't get the laptop for free. You probably spent £1,800 on a shiny new laptop. And so that cash is going to get recorded out. And so what happens is you have all of your net cash in, then you put in some of your outflows. I'm just making up some numbers here as an example to see what happens. And then you have your other ones. So yeah, we've bought this nice new laptop. And what this does is it basically adds your cash that you had at the beginning, then tracks all of the actual genuine cash movements that have happened in the period, and then it gets you to your closing cash position. And for those reasons, your opening balance of cash, the movement that's happened in the period that might differ because of timing issues, and certain elements that are balance sheet or non-profit and loss related is why this cash position at the end of the month often looks very different to your profit and loss.
Quick question.
Yes, go for it.
Would the laptop be under fixed assets?
Yes, it would be.
Awesome.
Great. Oh, nice and easy. That's exactly where it would be, yeah. There's then something called depreciation, which I guess your laptop isn't going to be in use for forever. It probably has a useful economic life of 4 or 5 years. And so there is something where you would depreciate the value of it each year, just to bring it in line with what's known as its useful economic life. And those movements of depreciation to kind of show it losing its value, that would hit the profit and loss. So there is a relationship between the profit and loss and the balance sheet, but you don't need to worry about that. That's what either your accountant is for or your snazzy bookkeeping software is for. Right. Now, I kept hammering home the point about the difference between kind of what's in the profit and loss and perhaps in your bank balance. And that's often a source of real anxiety for clients because the amount of times I have seen clients get really, I guess, baffled by the fact that they've got a really big tax bill, but the cash in their bank doesn't reflect the bill that is owed, is because of these timing issues. Oh, I can see a hand up. We've got a hi, Christy.
I think that's a really good question. So is a monthly business loan repayment an expense, or would it only be included in a balance sheet as a liability?
That is such a good question. That is a very good question. So there's two elements, I guess, depending on your terms of your bank loan. The majority of it will sit on the balance sheet. However, the interest element would hit the profit and loss or your income statement. So the capital repayment, the overall amount, that would, I guess, go up or down depending on how much you're taking out on your balance sheet. But the interest expense is an expense on your profit and loss. So let's say you took out a loan for £5,000 and it had interest on that. The £500 would automatically show up on your balance sheet. And each time you paid it off, taking away the interest amount, you would reduce some of the capital payments on your balance sheet, but the separate interest is on the P&L. Any other questions? And hopefully that was clear. If it wasn't, do let me know, because if it wasn't clear to you, it won't be clear to anyone else as well.
Got a thumbs up.
Cool. Good stuff. Thank you. Okay, so just to really hammer home the point on the difference of this kind of timing point with cash versus what's in your profit and loss, we're going to give you an example of what's known as the accruals basis, which is a very strange accounting term, which essentially means the invoice basis, and then the cash basis, just to show you the effect on, I guess, on cash flow, or at least what I should say is on profit, the looking at these different approaches can have for your business. And I cannot stress enough, there's not a right or wrong way to do this. It's purely timing. It's just the way it falls. So what we're going to imagine is that 4 things happen today. So it's the 7th of January, and I'm going to imagine that 4 things happen today. And the first thing that happened today was so looking at these points down here, I sent out an invoice for £5,000 for a web design project that I completed this month. Apparently, I'm a web developer in this example. I also received a bill for £500 in developer fees from a freelancer who is supporting me on this project. And in both cases, they're on 30-day payment terms. So I sent out the invoice. I also received a bill, but they're on 30-day payment terms. So from a cash perspective, nothing happens in scenario 1 and 2. But also today, because I was feeling very productive, I was clearly having an admin day, I paid £75 in fees for a supplier bill that I received last month. I believe I had some repair work at my office, and I paid that bill. That bill was received last month, but I paid it today on the 7th of January. Also, a client that I've been waiting on a little while finally paid their invoice to me, and I received £1,000 today for a project that I did last month. So all of those things happen today, but different things happen depending on whether we're looking at the cash basis or the accruals basis. So think about this as kind of like the invoice basis that we talked about with the profit and loss, or the cash basis, which is a little bit more like what's going on your cash flow. So on the cash basis, it looks like I made £925 in profit today. And on the accruals basis, it looks like I made £4,500 in profit today. Very big difference. And you're probably thinking, well, how can I get the 4,500 every month rather than 925? It's not about that. It's about timing. So because I sent out on the invoice basis, an invoice for £5,000, and I received a bill for £500, 5,000 take away 500 is 4,500. So on the invoice basis, it seems like, what's come in versus going out is like £4,500, nice, tidy profit. But this presumes 30-day payment terms. I haven't actually received the cash yet. What if my client runs away and never pays that bill, right? It's not actually, no cash has happened. But then on points 3 and 4, I did receive £1,000 from last month's client, and I also paid out £75 for an invoice, a supplier bill, I suppose, that I received last month. And so on that basis, it looks like I've made £925 profit. But the thing to remember here is if we then put this scenario next month, the 5,000 that I've sent out would then get reflected in the cash basis when that eventually gets paid. Fingers crossed we've got a client that pays on time. And again, a bit like that bill, when I eventually pay it out, that's when it gets recorded. So it's just a timing point, but that timing point shows you there's a big difference between 4,500 and £925. And that's why people often get quite shocked when they get their tax bill and the cash balance hasn't necessarily reflected it, because you perhaps haven't chased your clients hard enough, or perhaps you've paid out a lot of things rather than things coming into your business. And this cash flow timing can trip up quite a lot of people. Right, that's the heavy bit over on this section. I'm going to see if there's any questions before we move on. So I'm just going to stop sharing for a second. Let's see.
A quick question.
Yeah.
Funny one. Why don't the HMRC play nice and just tax us on what's actually coming?
That's a good question. So they can do for some businesses. Some businesses can elect to be on the cash basis. But you have to be earning, I don't know off the top of my head, so I'll probably have to come back to Amaka on this to send you the numbers, but you have to be earning a certain amount, like below a certain threshold, and have quite a simple business structure. But once you start to have more significant revenues, it's just not really an appropriate method of accounting for it. But the one thing to think about is they don't, I guess, ask for the taxes straight away. You're often paying it like 9 months later or a year later, depending on whether you've got a limited company or a self-assessment kind of business. And in that time, if, like, let's say you've sent out an invoice for 30-day payment terms and you still haven't received it 9 months later, I think at that point you should ask the legitimate question of, am I going to receive this money? Is this actually a write-off? Because then if it was a write-off, if you genuinely think you're not going to get it, you write it off. And then that wouldn't be reflected on the invoice basis. But, you know, I'm here for all petitions to HMRC to be nicer. Ironically, when you call them on the phone, they're a really friendly bunch of people based in Cardiff with lovely, welcoming Welsh accents and all very nice. But the rules that they make and the hoops that they make us jump through can often feel very cumbersome. So very fair point. Very fair point. Okay, let us move on to the next section before we go to our break. It would help if I could find the share screen. Oh, here we go. How have I lost it? Great. So now that we've got the basics of your financial statements, and really great questions, everyone, thank you so much. Let's get a bit into budgeting and forecasting. I always say this, running a business without a budget or a forecast is like packing a bag for a trip that you know absolutely nothing about. Let's use this as like a live scenario. Let's say I said to all of you, hey, meet me at Heathrow tomorrow and pack your bag. And that was all I said. How would you know what to pack in your bag when you don't know the length of your stay? Are you staying for 2 days? Are you staying for 2 weeks? You probably would pack different amounts of underwear depending on that answer, right? Where are you going? Maybe we're flying off to somewhere tropical, or maybe I've asked you to meet me at Heathrow and we're just going to jump on the Piccadilly line and go into central London. You might be a bit disappointed by that, right? Or what's the weather going to be like? Is it going to be super hot, 32 degrees, or is it going to be freezing, -5? You're probably going to pack different attire depending on those things. And without a plan, quite frankly, you will bring stuff that you either don't need or you'll forget some very key essentials. And the same is true for running your business. If you don't have a budget or a forecast, you are doing it wrong, because you run the risk of misallocating your resources, wasting time, and most importantly, just failing to align on your business goals, which, you know, they can change all the time, but you just can't really keep yourself accountable otherwise, right? Whereas with proper budgeting and forecasting, you can get some really good practice in place, because what this helps to spur is resource efficiency, acceleration of timelines. The amount of times I've had clients set a goal that they think is not going to happen for another year, and then they start holding themselves accountable, checking this every month, every quarter, and actually they accelerate the timeline and supersede what they want to do. Accountability. I don't know about you, but I definitely need accountability if I'm going to stick to something. So just the check-in of checking the numbers against what I said I was going to do is enough of the nudge for me to make sure I'm working towards that. But ultimately, it's the ability to adapt quickly with data-driven insights. And that's where you're really going to like leverage this as a small business owner, because you don't have a magic crystal ball, things are going to change. But with data, and the data is about your own business, you are able to kind of steer the ship in the way that you want to or need to. So why are budgets and forecasts important? Well, they help to identify risks early. You can plan and predict cash flows based on them. But my favorite part is that I see people go from being quite unconfident in this area to then getting to grips with their budgets and forecasts and then making some real boss move, confident, strategic, decisive decisions. If you're going to analyze your budgets and forecasts, I recommend you do it at least monthly if you can. If you can't, at least quarterly. And you want to track it against goals. But not all these goals have to necessarily be numeric. I think quantitative information is, of course, very important. I'm going to say that as an accountant, but qualitative information is equally as important. Are you getting back regular customer feedback surveys? Are you gathering kind of just general contextual information that tells you if a particular venue or a location is the right one for you? You want the quantitative information to marry up with the qualitative information where possible. So we're going to do, it's a guided interactive element here. It will be led by me, but you'll kind of see how this works. We're going to track actuals versus budget, and I'm going to show you why it's really important to perform an analysis in this way as a small business. So I'm going to make this a little bit bigger, just so that everyone can see this. Hopefully that's getting bigger. And what we've got here is our December 2024 budget in column C. In column D, we're going to say what actually happened during our analysis. And then in column E, once I filled out column D, it will show us the variance. And what that is basically showing us is the difference between what we thought was going to happen and what actually happened. And then column F is just expressing that variance or change as a percentage. But column H is the most important part of this exercise, and that is where you add commentary on your over or under spend. I will come back to that bit in a moment. Let me quickly just plot in some random numbers, and we will see what happens with our budget analysis. Okay, so I've just plugged in some different numbers because, like I said, you don't have a magic crystal ball. Obviously, things will happen differently than you have budgeted for. And I also bring this up to really stress, don't get so overworked with your budget that you think you have to know every single figure and get it correct. A budget is there for a guide, it's there as a spend, but you're obviously going to have over and underspend. So don't feel like you need to teleport to the future to know what your answer is going to be. You're going to base this information off of accumulated knowledge, averages of what you did the last year or the last few months, or just general understanding of spend, right? What actually happens is what actually happens, and this is the exercise here. So looking at my revenue, so looking back last month, December 2024, I'm now going through my monthly analysis. And what I can see is we had budgeted £5,500 for revenue, but actually received 6K in revenue. Commentary, this is the important bit. I've got to say what went on here and why. So I'm actually going to say, launched a new product, customers liked it. This is important because what this means is, if we launch this new product and customers liked it, we're probably not going to pull it from the shelves. We're going to probably double down on it and try it next month again. Staff costs, I budgeted 2,500. It was 2,500. At this stage, you might be tempted to just leave this commentary blank. And I get why you would do that if you were short on time. But get into the discipline of having a comment for all of your important items, at least, if not every single line item. And staff costs are an important item. So what I would say here, given that nothing has changed, is I just want confirmation that I know my numbers are correct, because what has happened here is there were no new hires and there were no leavers in this particular month. Consulting fees. So budgeted £1,000, it was 1,100. And the comment here is simply found an expert at a slightly higher rate. They were able to work more quickly. So perhaps that is why we were able to launch this new product in December. We were planning to launch it in January, but this consultant that helped us with it was a really fast worker. Yes, they had a higher rate, but we actually really liked it. And we've had some good results from there. Marketing costs, we budgeted £500. We did £650 instead. And so I'm chatting to the head of marketing. I'm pretending I've got a head of marketing. I'm clearly a small business owner that's wearing all the hats myself. I'm chatting to the head of marketing, and transpires that because the product launch happened a bit earlier than expected, we ran extra Google ads and Facebook ads. And we're actually going to do the same next month, because clearly we improved our revenue and something was working. So we're going to keep trying that. Travel costs were a little bit lower. This is a bit negligible. I think it's simply just a case of some staff worked from home. And then office stationery, we budgeted 100, we didn't hit it. This is really just a fixed cost that we have as and when. But given that we've got an underspend and we've had a good month, I'm just going to say treat office to batch of cookies, because we're feeling good. Right. So we've now done this task, and it might feel a bit arduous, but it's really important to do this, because this is how you unlock how to make success repeatable and mistakes avoidable. True story. I have 2 clients that were not doing well. One wasn't doing this process and one did this process, and we realized why it was a problem in both ways. I had one client who in 1 year, her revenue went up by 300% in 1 year. Sounds like a very good problem to have, right? But because she was just running her business off of vibes, she knew she was booked, she knew she was busy, she knew she'd had a good year, but she had not done any analysis to understand what had driven these changes in her business. And as a result, she wasn't able to replicate that success the following year. Big problem. On the flip side, I had a client that did have a slightly larger team. I think they had about 15 or 20 employees at this point in time. And we started implementing this process. And we went through, and travel costs was normally around £200. And 1 month travel costs had shot up to £2,000. And I said, look, I know you're probably just going to tell me that you went on some kind of training course in Vegas, or maybe you went to that sales conference in Miami. But I just want to understand what has driven this change. And he said, this is absolutely wrong. There is no way travel would be 2K. It's just impossible. We've not done any international travel. A few people get the train, like that is it. There's nothing else. Anyway, it transpired, true story, that an intern had been expensing first-class train travel down from Newcastle to London, and it had gone undetected because of their employee expense system. Sounds like a ludicrous story on both sides, not knowing how your revenue was kind of driving and allowing large costs to filter through the business. But quite frankly, 83% of you said that you were in growth mode when we did our poll. When you're in growth mode, these things slip through the net. If you don't have the discipline to go through, look at this and understand the what, the why, and the how. So when you're performing this task, you're going to ask yourself, what were the differences? Why were there differences? And how big were those differences? No one has a magic crystal ball, but financially speaking, this is your crystal ball equivalent to try to mitigate risk and inform decisions. I said this before, and I'm going to say it again. It makes mistakes avoidable and success repeatable. And what types of risk are there if you don't perform this? Well, there's all sorts of internal risk, of course, but there's so many external risks as well that you need to be factoring when you're making your projections or your estimates, right? There's political risk. You could have unrest. Like, let's look at what's going on in Ukraine right now. Given that Ukraine is Europe's largest exporter of wheat, that has had very clear unrest implications for the wheat industry across Europe. But there might be a positive spin to risk. You could have a pro-industry agenda. A friend of mine was banking on this eventually happening, and it's worked out for him. So he understood that caring about allergens and intolerances was going to be a really important thing in the UK at some point in time. He personally had experience with allergies, and he knew it's really important. And so he started developing an app to help small food businesses understand their allergies and intolerances. Lo and behold, a few years later, there were a few really tragic scenarios where there were, I guess, allergic reactions that resulted in deaths, that then made the pro-industry agenda not just a good idea to have, but enshrined in law by politics. And as a result, his business is zooming because the political risk on his side was a positive risk. I bring this up because I think people think the word risk means bad. Risk is neutral. There's positive risk, there's negative risk, there's upside, there's downside. Economic risk. You could have a recession or you can have prosperity. Geographical risk. Time zone. There's a reason that London is the center of the world for financial services. When London wakes up, it gets to catch the end of the Asian market due to time zone and the start of the American market. There's a reason why California, that doesn't straddle enough countries and regions in the same way, is not the financial services hub of the world. But also with geography, there could be natural disaster. My mum is from St. Vincent and the Grenadines. It's a very small island in the Caribbean that has an active volcano. I think it was in the same week, actually, that Prince Philip died, which is why I think nobody heard of it, but the volcano erupted and it just spelled disaster for the entire island. However, talking about risk and reward, that was devastating for farmers. Their land, their crops were completely destroyed overnight. However, the volcanic quality of the explosion that kind of went into all of the soil meant that the land was so fertile and abundant that the following year they had a bumper crop year. They were exporting goods that were honestly passion fruits the size of my face. It was just the most amazing thing to see after all of that disaster. Was some real incredible upside as well. Legal risk, changes in the law. Operational risk, that's internally. Do you have good controls, or is your intern expensing first-class travel? Bus factor, not a very nice term. It essentially means if a key member of your team was hit by a bus and sadly in the hospital in a full body cast recovering for the next 6 months, could your business still operate? And technology risk, just staying up to date. You cannot get left behind because there is a reason that Blockbuster is no longer a household name that many people know about. It refused to stay up to date. Blockbuster should be Netflix today if they decided to stay up to date with technology. They didn't. They went bust. They no longer exist. My Gen Z and Gen Alpha cousins have no idea what Blockbuster is. No business is free of risks. But if risks are not mitigated, there will always be a cash impact. So my tips on building a forecast are use historical data as a starting point, right? So if you've been running your business for 1 year, 2 years, 3 years, you have historical data. If you're starting from scratch or you're perhaps pivoting to a new area and you have no historical data, plot the landscape. ChatGPT can be your best friend. Like, Google your industry, understand what's going on, what's the typical price point. You can find out external information to kind of nudge you in the right way. But then you'll also have known internal changes. You will know that you're going to be hiring new people or relocating to a different office. There'll also be known external changes. We know that Labour announced the new budget a couple months ago. There's going to be changes to national insurance. There might be new laws. There are things that are outside of our control that we know about that we can plot into our forecasts and our budgets. But number 5, and this is the important bit because I see people get a bit too bogged down, do accept there are, of course, unknowns. Don't spend days and days and months trying to get this perfect model that doesn't exist. Accept there are unknowns, but amongst those unknowns, you want to operate within a range or an average, so it's at least anchored in some form of reality. And remember, all you're doing is telling a story. So the numbers can seem scary, but stories are way less scary. So just tell the story of your business and have the numbers match. If I'm saying I'm going to be hitting, I'm currently making £5,000 in revenue a year, but next year I'm going to be making 5 million. I think the story needs to match. I presume I'm going to need to start spending a lot more on marketing efforts. I'm probably going to need to hire more staff if that much activity is going. So just make sure the story of your business makes sense and that the numbers match in that regard. Okay, we are going to take a quick break, just looking at the time. Oh, great, we're right on cue. So if we take a 10-minute break, grab some water, have a comfort break, I would say come back at, actually, if we come back at 5 past, that should be sufficient time, and then we'll get into the final section. So yeah, I will go off camera for now, and I'll be back at 5 past. And then, cool, I was about to say, let's get recording again, but you are way ahead of me, so. Okay, brilliant. Let us get into this next stage, which is we've got a short part on growing your business external capital, which I believe will be helpful for those of you in growth mode, which is most of you. So cash flow can be bought, whereas profit cannot. If cash flow is a problem in your business, you could secure a loan, perhaps against the assets that your money is tied up in the business, or you can raise funds. Boosting your cash flow in this way can be a lifeline for small businesses who are looking to kind of bridge that gap between ticking along and high growth. But unchecked, it can be a ticking time bomb until the well runs dry with cash. As we talked about, cash is all about timing. It's very, very tricky. So what are some cash flow levers that you could maybe think about to make sure you're kind of buffering up that cash? Now, you want to think about this as a financial diet, but not the kind of diet where you're trying to like lose weight and get really skinny. Actually, it's kind of like a high protein bodybuilder diet where you're trying to like beef up and bulk up, she says with her tiny little arms that you can hardly see. So things that you want to do to try and build up cash flow within your business outside of maybe securing a loan or external capital are small little changes you could think about day to day within your business, just to kind of make tweaks that swing the cash flow pendulum in your favor. And one of the best things you can do as a small business owner who might be used to kind of living invoice to invoice is secure your revenue up front. And what I mean by that is it's obviously unrealistic to expect a client to pay, I don't know, like a 5,000 invoice in full without anything in return straight away, right? They might do, so you should ask. If you don't ask, you don't get. That is an ideal scenario. But at the very least, ask for deposits or upfront payments where possible so that you can secure that cash coming in, just in case your project gets delayed or pushed back and all these different things. If you're always on the back foot waiting for payments later, it's a problem. And in business terms, what you want to have is shorter receivable days and longer payable days. What that means is that it takes less time for you to receive cash in from your clients, and you have a longer term until you pay out to your staff or suppliers so that you can build up your cash flow. Think of it like this. An example of a short receivable day is if you go shopping to Westfields or whatever shopping mall it is on the weekend and you buy something from, I don't know, Zara, H&M, whatever it is. You tap your card for that payment. It's pretty instant. There might be a delay of 24 hours from the card processing company, and then that shop receives that money in 24 hours. That's a pretty quick, immediate receivable day. But you might also have scenarios where you get paid on 30-day payment terms or 60-day payment terms, or even there's some of the big supermarkets that they really squeeze their suppliers. They have 180-day payment terms. That's 6 months. Ouch. Meaning you will get that money, but 6 months later. You can imagine why you want to have longer payable days, because if you've got to pay out your staff, your suppliers, your merchandising, your equipments, everything up front, but you're not getting paid until 6 months' time, you're going to get a cash crunch. Whereas if you reverse that and you get all your money up front and you don't have to make payments till later, that's how you get to build up a cash buffer. But beware, not all the money in your business bank account usually is yours to keep. If you have done well and made a profit, then you are likely to owe some of that money, whether that is corporation tax, income tax, or even VAT, to HMRC. So I cannot stress this enough. Get a separate bank account or one of those snazzy digital pots with the kind of modern tech banks. Get a separate place to put your tax money in so that you do not get into the habit of thinking that that money is yours to spend. It is not. Ring fence it, put it away, maybe even put it in a high interest savings account if you don't have to pay it for a while, but that is not yours to spend. Lastly, for any of you that have a VAT registered business, not all of you will do, but for anyone earning 90K or above, you are likely to be registered for VAT. When you are a VAT registered business, what typically happens is you pay, you charge VAT on the sales that you kind of sell to customers. But what many people don't know is you get to net off any purchases you've paid for that has VAT attached to it. Meaning, if you've got sort of 20K of VAT to pay to HMRC because you've made a lot of sales to customers, you can reduce that 20K by maybe you purchased a laptop that had VAT on. Maybe you paid for a bunch of freelancers that have VAT on their invoices. You get to claim that back, therefore reducing how much VAT you pay. I guess you can see that's really clearly a nice cash lever there. You are stopping huge outflows of VAT. And in some instances, if you didn't make many sales in that period at all, but you did make a lot of purchases, you actually get into a position where HMRC pays you for the input VAT that you've had. So it's a really sensible thing to look at doing. And it's so important to build up that cash cushion, that cash buffer, because it allows you to weather the financial storms and come out stronger on the other side. And that is whether you are using that cash cushion to operate in what I call crisis mode. So whether that is surviving a potential recession or the pandemic or anything that, you know, is a crisis that nobody had planned for. Or equally, and this is the bit that should spark most of your attention, not even talking about survival crisis mode, so that you have the ability to take advantage of opportunities as they arise. That is true growth mode. I remember once when I first started my street food business, I was very early doors, didn't have much of a cash buffer, and a large household name wanted to work with me, but they had 90-day payment terms, and I couldn't. I had no cash. There's no way that I could wait 3 months to pay my staff, pay the ingredients. It just didn't make sense for me in that moment. I wasn't able to capitalize on growth mode. 4 years later, that same business reached out, thankfully with a bigger budget, and said that they wanted to work with me. And at that point, after it took a few years of kind of working this out properly, I finally had the ability to work with them, and their payment terms had got even worse. I think it was, at that point, it was 120 days. But I had the cash buffer to know that I was going to get paid by them. It just wasn't going to be for a long time, to take advantage of that really great opportunity. And so having the cash cushion isn't just about crisis and survival mode. It's about growth. It's about propelling. It's about saying yes to that opportunity that gets you to that next step without having to think, oh, is this going to be good for cash? Are we going to run out? It's so, so vital that you use these techniques that I talked about to help leverage your cash flow, as well as, you know, if at the moment is right, looking at external capital or loans. So, propelling your business forward. Propelling your business, right, requires a growth mindset. And unlocking growth requires small business owners to relinquish control. Yes, relinquish control, all of you. It can feel so uncomfortable. I know, I'm going through it personally right now, trying to trust processes and people. But if you do not put yourself out into that uncomfortable growth mindset zone, you run the risk of stagnation. And I promise you, stagnation is major discomfort. The biggest pivot question me and my business partner often get asked when small businesses are in growth mode is, can I afford to start hiring? Hiring is very time consuming and can be one of the most expensive things to get wrong. But if you nail it, you get to unlock revenue, efficiency, and time. If a role doesn't directly generate revenue or directly linked to making you more efficient, you should actually question whether it's needed altogether. But if it is, you're going to ask, should I opt to hire someone as a fixed employee, or should I contract them out as a freelancer? So, employee versus freelancer, the big small business debate. What you want to ask yourself is 3 questions. Is the work an essential or critical part of your business? Does the role contribute substantially to net profits? Meaning it either generates you revenue directly or perhaps it helps save with efficiencies and time. Do you have sufficient work for them full-time on either a full-time or a part-time basis? Meaning rather than ad hoc or sporadically. And if you answer yes to all 3 of these, then employment might be a better route than contractors. But what are the pros and cons of each? Well, with an employee, you are able to demand more autonomy and control of how they work. You can also demand exclusivity, making sure that they don't work with competitors in your clause, or perhaps if they do leave you, that they're not allowed to work with competitors for, I don't know, 3 months, 6 months following that. You can also build in loyalty. There's just kind of culture and perks of being an employee that kind of has this built-in loyalty. But the downside from a business perspective is they are a fixed cost regardless of whether you have made a sale or not. And you as the business needs to pay for their upskilling, training, and development. It shouldn't be considered a bad thing on paper whatsoever. But the point there is where a contractor or a freelancer kind of is in control of their own upskilling and training, you need to be on top of it and make sure that you are doing value add training, not just training for the sake of it, because that's a waste of resources. When it comes to contractors, you might want to think about them as being the right one for you if this is for a particular niche, specialism, or a fixed term project, for example. You have the flexibility to dial it up or dial it down as the business needs. But the downside is they do work on their own terms. You are not able to kind of dictate how, when, and why they work. They probably have other clients. I'm sure they do a fantastic job for you, but you just can't quite demand that same autonomy and control as you do with an employee. There's also the risk to IR35. I won't bore you with that too much. It's probably not relevant for the size of businesses that you have. But essentially, if you fall foul of IR35 rules, which is where you essentially hire a contractor who is essentially an employee, HMRC may deem that you are avoiding PAYE taxes, and there may be implications for the individual and the business. So just something to think about. Any questions before we move on to systemizing your business?
Really good question.
Yeah.
Your template from earlier on with the difference, P&L, so on and so forth, is that available to us on a Do It Now platform, or is this your IP?
It's my IP, but I'm happy to share my IP. I would say it's for illustrative purposes is the asterisk I would add to it. So use it for a reference point. I'm happy to to share that. If the Do It Now Now team reach out, I'm happy to kind of make a copy available for you. I would just heavily caveat that it is for illustrative purposes, and would need to be tweaked or modified for it to kind of be relevant to your business. But more than happy to share that.
That'd be amazing. Thank you very much.
All good. Any other questions before we move on to the next section? No? Okay, cool. We will get into systemizing your business. Right. Hands up, how many of you relate to this sentence? Are you simultaneously the HR manager, the head of sales, the bookkeeper, and the social media intern? Does this feel relevant? Okay, yes, I know the feeling. It's time for you to relinquish control to grow. Whilst hires certainly help, in reality, the key to unlocking growth more invaluably than hiring is processes and systems. Processes and systems should be every small business owner's best friend. Businesses, and I mean true businesses that are not just a side hustle, are built by processes, not people. People matter. Of course, people matter. But process matters. And this is why process matters more. Because talented people within your organization can actually be hobbled by really poor processes, whilst hesitant people can be uplifted by smart processes. It's all about the processes. And if you're juggling everything, which by the looks of it, with those of you that put your hands up, that's many of you, it's processes that will enable you to stay on top of things way more effectively. Trust the process, even if the process doesn't know we're trusting it, okay? So I want to get a bit interactive with you all now, so that we can kind of talk about processes, tools, systems. Have a think about this and then start to put in the group chat, what is currently the biggest pain point for you? Let's talk about it. We're going to use this as a bouncing off session to think about things and see if there's some similar themes with you. What is an area of your business that is perhaps the most time consuming, the most challenging? Maybe it's the most inaccurate. Maybe it's the most inconsistent. What is currently the biggest pain point for you day to day in your business? I'm going to leave this up for a few minutes while we get some answers in the chat, and then we'll kind of make it a bit of an open forum. Stop sharing just so I can start to see some answers. Okay, we've got a couple in so far. I'll wait for a bunch more. So what is currently the most painful part of your business? And everyone's pain points are different. For some people, it's something, it means that it's really tedious or boring. For someone else, it just means it's taking up a disproportionate amount of time and not bringing in revenue. For other people, it's just inaccurate, and it's just really annoying you that it's inaccurate. Or maybe it's inconsistent. So a few more answers coming through. There are at least 25 of you on here, so we're going to wait for a few more to come through. So we're going to see if there's any themes starting to appear. So chasing payments, securing regular revenue. So like, I guess that means like recurring revenue. Someone else said securing revenue. Attending social, so networking basically. Recruiting. Two other people have said recruiting, so that's hiring. Some people have said social media and marketing, so there's definitely some themes coming up here. Responding to partnership requests. Can you just expand on that point a bit more? What do you mean by partnership requests? Just so I understand that a little bit more. Quite a few people applying for funds, working local authorities. Recruitment has come up again. Funding applications, social media. Someone else also just said just not enough hours in the day, which I totally relate to. We all wish we had the same 24 hours as Beyonce, right? Okay, so when it comes to sort of social media and marketing, I'm just kind of doing these in buckets that I can see. What is it about that that's challenging? Is it that it's time consuming? Is it that you don't enjoy it? Like what are the things that's driving that being a pain point for those of you that said marketing or social media? Oh, partnership requests, everyone wanting you to do things for their organization. I think the answer there is focus on your organization, basically. Um, uh, and only do the partnerships that are value add. Like, I think 2025 is a new year, time to be a bit more ruthless in terms of if everyone wants you to do things for their organization, how are you growing and propelling your organization? Partnerships can be a really strategic way to grow, but only if there's the right synergy and it gives you returns. So I know when you first start a business, you kind of want to get out there and be seen and doing things. But I learn from a people pleaser in recovery, a serial yes girl, that you have to basically partner. You have to be very selective about your partnerships, even if it means like having a dip in revenue for a period of time to then secure the right partnerships. There's nothing worse than getting a really good opportunity come your way that you have to say no to because you're in the middle of a really kind of rubbish, mediocre partnership. Okay, let's see what else we've got. So social media seems time consuming. Okay, I personally find social media the biggest pain point. I have outsourced it to somebody else to do, basically. I still know that I need to speak in my tone of voice. It still needs to be led by me. And so there are check-ins, but I have just decided that there are people who do not find it time consuming. They find it really fun. Something that like a reel that would honestly take me 3 hours to do takes my social media assistant like 15 minutes. And that is an example of a good use of somebody's time, somebody that is good at it, somebody that enjoys it, and somebody that is better at it than I am. That for me is an obvious tick, tick, boom. If you're not at the place where you want to hire someone, and just to be clear, I haven't hired somebody full time, just on a freelance basis, but I found some tricks to help. So if you are making a reel and you know you've got to squeeze it down to 60 seconds and you've got all this content, honestly, the speed function button is my best friend. When you're just like, you're like, hi guys, come with me to this conference. And then suddenly it's all sped up and everyone's walking around the conference hall. And you basically turned a 4-minute clip into a 60-second clip like that. That's a helpful tool to have. For those of you who have kind of just talked about general kind of time, I'm just guessing here. If you're saying not enough hours in the day, are you spending quite a lot of time on perhaps administration, that like maybe it's like answering emails, things that like kind of feel like they take up your time? Just if you can help answer that, that would help me answer this better. For those of you who've said grant applications, you want to have a good system in place for grant applications. The reason being, it's unlikely that every grant you apply, you're going to get, right? And for those of you for whom grant funding is how you make the majority of your money, you're often going to be competing in the same space as many other of your peers for limited funds. And so what's really important for you to do is identify which grants actually align with your business, right? It's wasted resource to apply for a grant that just isn't like in line with your business. And the way to kind of find this out and get on top of it is to look at different grant portals, which does come with a cost, but it doesn't break the bank. So if I remember correctly, there is a portal called Grants Online. Yes, Grants Online. I'm going to type this down in the chat. Grants Online. And I think it costs like £100 every 6 months, something like that. But what it does is allows you to filter through all grants in the UK ecosystem, and you can filter through based on, I guess, your industry or your location and that sort of thing. That is a valuable use of your time. Otherwise, you're stabbing in the dark. You're only hearing about things that you've heard about. You're not taking a proactive approach to funding. You're taking a reactive approach. Use tools to help you. And I mean, for those that sort of said things are time consuming, ChatGPT really is your best friend. I say this as somebody who doesn't want you to use it as an advisory tool, but for summarizing things. I got sent a really long document the other day and I just did not have the time to go through it. I asked ChatGPT to tell me the highlights, and that was enough for me. That was really incredibly helpful. I got a lot of my time back. Equally, Christy, who's on the call today, she joined our Christmas party. We had this really fun quiz, and there was one element that we were trying to kind of create like a Spotify Unwrapped kind of element. And honestly, I started trying to design my own Spotify Unwrapped Christmas poster. And halfway through, I thought, what am I doing? I'm not good at this. Like, this is taking me forever. I said, hey, ChatGPT, can you create me a Coco Financial version of a Wrapped? It came out in seconds. It looked perfect. Don't spend time on things that are actually not value add, that take up a lot of time if you're not good at it and you don't enjoy it. Find tools to help you. Someone has said, I don't do any social networking. It interferes with my spiritual energy. Ideally, I'd need to find someone to do it for me. With that, that's an interesting one, because I think it's so important to be tuned into your energy and what aligns to you, and not to force yourself to do things that you don't enjoy or are not good at. But what I would say is networking for the sake of networking probably doesn't align with anyone's spiritual energy. Like I'm so done with networking for the sake of it. But I would say, as a business owner, no one is ever going to represent your business in the same way that you do. And so I would encourage you to, if your spiritual energy is feeling a barrier with sort of social networking, maybe align yourself, because I'm sure there's other people like you, to places that you can network that feels like a safer space. There is a lady called Daisy who runs a page called The Selfhood, and it's literally designed for community and for people that find sort of the type A over networkers just like a bit too much. And their networking isn't like, let's stand around and have a glass of wine and exchange cards. It's kind of like a, hey everyone, let's go to a co-work cafe, and we all happen to be working on the same kind of industry or the same vertical. Maybe you just need to find your tribe when it comes to that. But I would say don't avoid it altogether. But if it is interfering with your spirit, listen to that and do find ways to kind of get around that. Oh, thank you, Kate. By the way, he said Charity Excellence Framework has a grant funding tool and is free. Yeah, the whole point of the session is for everyone to kind of chip in with any tools that they know. For those who have said recruitment, that is a tough one, isn't it? I think that is one area that you have to spend time on. And the reason being is, if you get hiring wrong, to the point earlier, it's just pretty disastrous for your business for many reasons. If you get the wrong fit, it can change the culture of your organization. If they just don't have the right skill set, they get hobbled pretty quickly. But it's a really necessary part of kind of growing your business. I would say, depending on the size of your business, you don't want to make there be too many hoops for someone to jump through that you don't end up hiring someone. But as a small business, it's even more critical that you protect your business, yourself, your small team. And as a result, I would say set the bar high from the very first entrance stage for recruitment. Basically, so that the trash can take itself out on the way, before they even kind of get through to an interview stage. Something that I have seen many startups do successfully is basically set a task, just like an online task, a 15, 20-minute task that they have to complete before they even get to an interview stage. And that often tells you what you need to know about the speed at which they work, their attention to detail, the ways in which they think about problems. And I think it's really, really important as a small business that you look at maybe taking that as a step, because recruiting will never not be painful. It's why recruiters, I guess, take so much commission off of people, right? But if you set a certain standard or a precedent or a bar, that should helpfully mean that when you get to interview process, those that you hire are who they say they are, and their actions match up to that. Somebody has said systemic barriers. That's obviously very broad. Would you like to explain a little bit more there? I'm not sure if there is sort of a tool or a web app subscription that helps address that, but if you could be a bit more specific, we can generate a bit of a conversation and talk about that. Rolling down to see if there's any more answers. Oh, sorry, social media networking. Okay, so you mean being on Instagram or Facebook? Got it. Yeah, Helen, I find social media spiritually challenging too. And people don't believe me because I'm on social media and I do Finance Fridays with Fee, but it does feel very contrived. However, it's a media that's not going anywhere. And so if you what I've done to get around this, and this is just my personal take on it, I've stopped looking at views, algorithm, likes. I've asked myself, what's my why? What's my reason I post on social media? And I'm not doing it to get new customers. If I do get new customers, bonus. Some people are on social media to get new customers. And if that is your reason for being on there, that's great. You've got a purpose, you've got a direction, and you will do things to kind of work in that way. I've decided that because of the kind of organization we are in terms of helping people understand finances and things like that, our purpose for putting content out is to just have constant, relevant insights that are helpful to people. So that if anybody is then speaking our name in a room to a bunch of new people and they say, oh, I've not heard of Fee, I've not heard of Coco Financial, and they just go to check, it looks really bad if the last post was from December 2021 and we've had no content. It shows that we're not relevant, we're not engaged, we're not kind of tapped in, right? And so ever since I've shifted my mind that I'm not putting stuff out for likes, for followers, for sales, but I'm putting things out as an anchor of our brand, it has made it so much easier mentally and spiritually to kind of to kind of make that change. So maybe ask yourself what you'd want to get out of social media, and once your mindset switches to it, it's a lot easier. Ademola has said, does anyone have any experience using AI assistants? And this is where I thought this conversation was going to go from the jump. So I'm glad we've got there. Yes, interesting. I'm actually based in Dublin for the first 3 months of this year to try and build sort of an AI agent to support micro businesses. So I'm super fascinated about this topic here. But one thing I will say is there's a company called, oh, what are they called? They've just changed their name. I will find this out as well and send it over to you, to the Do It Now team. I should know this because I actually know one of the founders on the team, but I just know they've recently switched their name, where they've essentially built like a AI agent for email. So rather than you tagging and coding things in your inbox, it does it for you, and it does it pretty smart, and it prepares your email responses on your behalf as well. And it got a pretty good job at doing so, that they reportedly only 2% of emails get edited from what they kind of respond. It's getting pretty smart. The thing to remember there is you probably want to edit the odd line for a bit of personalization, and then it starts to learn. It learns your tone of voice. If the last person emailed you 6 months ago saying they were going off skiing, it will say, hey, John, how's the ski trip? Like, it actually is pretty smart. I personally think I spend a disproportionate amount of time answering emails that are not value add. That's an example of an AI agent that can make your life better and easier. Let me find out the name. And actually, because I know one of the founders, let me see. I can't promise anything, but I'm pretty persuasive. I'll see if I can find out if they've got a discount code or something, because they They've just recently launched, and they've just from their fund in San Francisco, and they just came back to London just before Christmas. So I think they're pretty excited about supporting small businesses. So
Fantastic.
leave that
Love
with
to hear
me.
that.
Leave that with me.
Thank
And
you.
we'll come back there. And then last point before we move on, Esther, systemic barriers. Having professional interactions with institutions or representatives of institutions with clear prejudice, gender, race, age, leading to imposter syndrome or decreased access to opportunities. That is a tricky one that's not going to get magicked away by any tool, quite frankly. I would say that there's no kind of magic wand for this, and we wish there were, right? But what I would say is there are plenty of funds that are specifically funding particular genders or particular race. There's even ones for particular ages as well. And so imposter syndrome, I would just say everybody has, and the only way to address that is to think like a wealthy white middle-class man named Peter. I say specifically Peter because apparently there are more CEOs in the FTSE 100 named Peter than there are women CEOs altogether. So that's why I'm picking on Peter. It's definitely got a lot further to go, right? But just a couple of months ago, a fund was launched in the UK with, I think, 242 million to go specifically, for example, to women-led businesses. Yes, that's a drop in the ocean compared to the billions available to men. But the point I'm making is there are shifts and patterns changing, and there are tools out. Sorry, tools is not the wrong word. There are opportunities out there for people who are non-white old males, basically. And last bit, someone said, thanks for your suggestion. I definitely know what I would want from posting, but it still requires time consistently and constantly. It does. And I think you just have to accept that, right? And I think that's where I'm at with my social media. It does require that. And if you do know what you want from it and you know that it requires that time, then that's a clear, because you know what you want from it and it requires time, you need to dedicate resources to that, whether that is your time, spending money on somebody else's time, so that you can achieve the goal that you want from it. And once you've accepted that that is something, that's where you put your efforts, and it gets easy after a while, right? Because it just becomes part and parcel of it. But I think where your hesitancy is because your spirit doesn't sit well with it, in the same way that mine has struggled over time as well. Okay, let's get back to the workshop. Thanks for everyone's participation there. Let me get us back on the road for the final part of this workshop. So we talked about systemizing, and really it's, none of you kind of brought up these ones that have typically come up, and this is what I love about these sessions. Everyone sort of has different different areas that they've got pain points with. But I think the point is you need to track, have data, and have systems in place. And what you want to do when you're systemizing, and so one person did ask about how do you have kind of good processes and system, you want to document your processes at every level. This sounds arduous. Yes, do it once, you don't have to do it again. Map it out and have a blueprint so that even if someone in your team leaves, the process is the process. What did I say before? Processes matter more than people. We love people, but people have their own goals and individual aspirations, and they may not work for you for the entirety of their adult life, right? They are likely to hand in their notice, leave, move country, all these different things, right? Automate any tasks that are not value add. Just simply, if it's not value add, automate it. And what I mean by that is, I used the example of the AI email template, but even if you're not going to use that, you can create templates in your own emails, right? I was so embarrassed when one of my team members sort of said, Fee, you send out the same email like 10 times a week to different people. Why do you not have a template? And I was like, well, I don't know how to use it. This is a while back. And immediately she just copied this kind of text that I had, put it in a template. And now anytime a customer emails about this one thing that I often spend, 10 minutes like drafting out, it was just there. I changed their name. I added one personalization line, boom, done. You have to have a system that makes your life easier. You started a business because you care about serving your customers or your community needs, not because you care about emails. So let's get into the final section about financial abundance. Anytime you're following a moment of difficulty, and you all mentioned things that you've got challenges with right now, always think of it as an opportunity. It's an opportunity to rethink how we operate. Are we still doing things this way because this is how it's always been done? And re-examine the value of how it's always been done. How it's always been done is not a helpful measure or yardstick of how things should be done. Adjust it to shifts in the present day. So here's my money moves mindset on how to sow your seeds. Look at long-term plays over short-term thrills. Do not get distracted by the soft life trend. The soft life trend looks great on social media. Soft life, not working too hard, not doing much. But I promise you, delayed gratification is powerful. Do not play the comparison game. When I first started my business, I did not have a salary for 2 years. And that was probably at the same time that my friends were starting to get a bit more professional in their career and starting to get big bonuses. And they were able to say things like, hey guys, who wants to fly to New York next week? And I'd obviously be there like, well, not me. I'd love to, but I can't just fly to New York next week on a whim. If I was playing the comparison game, I probably would have packed in the business, gone back to a corporate role, and got on a flight to New York to be with my mates, right? But delayed gratification is so, so powerful. I'm now at the stage of my business where it's taken a long time, but I finally got on the property ladder. I feel comfortable to go abroad a few times a year. I'm working in my purpose. I have passion meets purpose, and my Venn diagram of those two things is like one giant circle. I genuinely love what I do. My friends getting their nice fancy bonuses hate their jobs. They hate their roles. There's no meaning. There's no purpose. They're not helping any community. And their lifestyle has creeped to the point that if they did, God forbid, get made redundant or something like that, they'd probably struggle to keep the upkeep of their life that online looks like this great soft life trend. So do not play the comparison game. Walk in your own purpose. Scared money versus smart money. Well, the saying goes, scared money don't make no money. Because yes, with risk comes reward. Scared money doesn't make money, but we of course acknowledge that you need money to make money. So if we're going to be talking about making money, let's make some smart money moves. So here's a couple rules for you. If something appreciates in value, buy it. If it depreciates in value, perhaps lease it instead. Make moves that future you will thank current you for. And this is the most important bit. I want you all to dedicate resources to the life that you actually want to live. When I say resources, a bit like what I said with the social media point. Time, energy, money, focus. Dedicate all of your resources to the life that you actually want to live. I think too many people are passive passengers in their life. You are the active ship of this captain of your business. Do it with your life as well. And ultimately, have a purse with a purpose. Because yes, money buys basic means and necessities, but multiple studies have shown that money doesn't buy happiness after 75,000 US dollars, which is it's probably closer to 60K now with current FX rates. Ask yourself, what's your purpose? What's your value? What's your well-being? Ultimately, ask yourself, what's your why? And once you've found that, answering all the other questions within this workshop becomes so much easier and clearer. That is all from me today. Any final questions, comments, thoughts, feelings? Now is the time to share. Otherwise, I won't keep you any further from your evening. Oh, someone has said, I don't think you spoke about this. How should we account for restricted funding in our cash flow? I usually account for each separate fund separately. That's a very specific question, which I'm happy to answer because I work with enough CICs to know this term. For anyone that doesn't know, restricted funding is essentially when you receive funds from like perhaps a grant or a grant funder or a trust, but it's kind of ring-fenced for very specific purposes. There's no right or wrong way to do this, really. You can just have a section called restricted funding and then restricted activities. Depending on what software you use, whether that's QuickBooks or Xero, there's kind of these different tracking categories that you can use to track them. It's no different from any other funding in terms of how it's presented kind of in your accounts. It's more just that you want to keep it separate because there are actual restrictions contractually on what you can and can't do with it, right? So you just want to have some kind of marker so you know that it's restricted funding. And the fact that you have you usually account for each fund separately, like that's totally fine to do that. Any suggestions for systems to automate processes? Particularly with project planning. I personally love Trello, so that's so interesting that it doesn't work for you. I guess it depends on the nature of your project planning. There are so many project planning tools and it depends on the nature of your projects. I find Trello is great because it's collaborative, it's dynamic, it's kind of like post-it notes, but you can bucket it into any bespoke box you want to, and you can add links, documents, like you can collaborate on it. What's lacking in Trello for you specifically, Kate, just so I can maybe give a better suggestion? Like what kind of projects do you plan that
I'll just come off mute for it. It's mainly just where we ended up with like so many different the need for so many different projects. It just it didn't really it didn't seem to be allowing us to put everything like to group. There was too many notes on the front screen, so it just got too big.
That sounds like your project almost had, because it's by design, it can be as big or as little as you want, right? And I know what you're referring to because I have one Trello board that is disgusting that I would never want to show anyone because it's got so many things on. But all the others I've purposefully simplified because they can get out of control. I literally have like whatever like the first tab is, queries, in review, done. Like, and I've just like, I've made it clear that we don't have anything else. Because if there's anything else that needs to be added in, it can get added in with a comment or a flag or a link to something.
Okay, so maybe we just need to review how we were using it.
I would say review and just keep things simple where possible. I don't get paid by Trello, by the way. I just genuinely like using it. But I did find that if you allow it to get out of control, it can do. Great, Serena has said Monday.com is good and has discounts for non-profits and charities. That's good to know. Okay, I think that's everybody's comments. So thank you all so much for your time. To the Do It Now team, if you just drop me a line at some point next week, I can come back on the templates, but also on my answer about the AI agent, if there's any discounts. I should also have some discounts available for things like QuickBooks, if that helps anybody as well. But other than that, I wish you all the best on the rest of this program. I sadly won't be there for the sort of second half of it, because as I mentioned, I am moving to Dublin for 3 months. But if anyone is still part of the Do It Now cohort later on in the year, fingers crossed they'll have me back, and I hope to see you all very soon.